All right. Good morning, everybody. Today's Thursday, the 8th of January. Can we slow it down a little bit? I mean, we just began the year here, and we're already 8 days ahead. But anyways, let's begin the stream here, folks. Patreon, YouTube, Discord. You know the deal. Post your comments, your questions on any platform you'd like. I'm going to address them before the end of the session, but let's begin here with SPY, and before we do that, let's do a check on the audio and the picture. If you can see everything fine, hear me fine. We're looking at the SPY 5 minutes chart, 689.32. Everything looks good. Let me know. We'll begin right away. Okay, thank you everybody for the feedback. Let's begin here with the SPY. And by the way, again, if you joined us recently in the Top Gun tier, post your comments anywhere, any platform you're watching this in. And you can, by the way, if you're on Patreon, you can just click the link and watch it on YouTube if you'd like. But anyhow, the SPY, we went down, opening, gapping down, then we got a little bit of a rebound as we anticipated in the morning brief that we're going to see the VIX going down. Let's see here. To fill its gap, and then it's going to come back up. It's going to cause some problems to the market. So let's go here back to the SPY, which the majority of the weakness, by the way, is happening in the backs of technology. So the Qs is the one leading to the downside. Right off the gate, that gives you a formula that's going to be really, really tough for the SPY to move up if the weakness is coming from technology. Because you could see here in the map, yeah, we have the rest of the map doing pretty good. The financials, the defense contractors are blasting higher. Staples even moving up today. Utilities. It's just that the tech trade is getting hit pretty hard. And if that continues, pretty hard for the SPY to continue to move up. And when we look at the options market data, I am looking at the expiration date of today, and you can see here that we have high open interest overnight from 691 all the way to 95. That is slightly out of the money right now. So do the puts compete with that? Not really. They have decent numbers, but they're spread all over the place. The calls are more concentrated. Next thing we have to look at is the volume. Highest volume for the calls, 184,000-ish at the 690, but the puts have bigger volume at 179,000 at the 688. Okay, who has the advantage in the open interest now? Because you need to do maximum pain, and there is already maximum pain in the calls because you see the biggest numbers are out of the money. In the puts, though, if you want to exercise maximum pain, you need to move the tape all the way to 695. Kind of really hard to do at this point. Or at least try to move it above 690, but at that point, 690 is going to be the sweet spot for the market maker right now to just consolidate until further feedback. But my 2 cents. We have high volume in the puts, we have high open interest and high OI change. And I think that the market maker at some point has to realize that the easier path here is you got to succumb to your wounds and accommodate the puts and push us all the way down to 685. I don't know if it's going to happen today, but I mean, you see the 685 here. We have a big number of open interest and high volume, so why not? It could happen. Now, if we look at the weakness, source of the weakness in the market coming from NVIDIA not looking pretty good here. So rejection, after we talked about this, right? A few streams ago, we've been talking about this rejection above 190. If that continues, then we're going to break the support. And we did today, right? We did, and we have a retest right now. It looks like NVIDIA wants to do an inverse ABC and crack below 185 and continue to head down. So we zoom out to the daily chart right here, in which you're going to notice here that NVIDIA is beginning to lose the 50. So it remains to be seen if it's going to close below the 50 or not. But closing below the 50 means that we have further declines to go. And that means reaching the 20. That's not really significant, but we're probably going to go down to the lower Bollinger Bands in time. So this is really critical that NVIDIA holds if the market wants to continue to hold. But otherwise, it looks like we have an inverse ABC coming here in NVIDIA. I'm also seeing weakness in names like Oracle. So Oracle, if you zoom out to the daily chart, looks to me that it's giving up on filling the gap right here. And it's readying to retest the lows and perhaps flush down. So Oracle could be a candidate for a put option trade here if you're looking for some. Let's start with ORCL. Sitting right now at 187. Suppose that we go down at least to the lows here, 177. So let's do this. Go 2 weeks out just to be safe here. If we do the 185 and then sell the 175, we're spending about 320, 330 to make 670 with a really good chance of profitability. Now, some of you might look at this and say, well, that's too expensive, man. Give me something cheap here. So I'll give you something cheap. You have to go with the butterfly, and if you do the butterfly, you need to be really close. So 185, 175, 165, or you can do 180 and then 175. So you can do a really tight butterfly, 185, 180, 175. You're spending about 78 this time around. It has a pretty decent chance of profitability, and the maximum profit, of course, is going to be much more. So up to you, your risk tolerance, whether you want an actual divot spread or a butterfly spread. Butterfly gives you the advantage. As you get closer to the expiration date. So if you go longer expiration dates, butterflies don't make sense anymore. So it has to be really short term. But I think that Oracle has further declines to go. And that comes hand in hand with the weakness that we see in NVIDIA. Bitcoin, though, is heading above 90,000 again. So that's okay for now until the sellers, of course, show up. So right now what I see in Bitcoin is perhaps a falling wedge pattern. It's going to begin to retest some of these resistance that we have about 91,000. And maybe come back down and break below once and for all 90,000. If we look at Apple, Apple now breaching the support, so it looks like it wants to close the gap right here. But bear in mind that we're outside of the Bollinger Bands, so I would actually take the contrarian approach and buy some call options on Apple before the end of this session, betting for a rebound. So if you want to be adventurous, once again, you can go with the calls for tomorrow's expiration. And if we do that here, let's look at Apple. Anticipating a rebound, maybe to 260. So if we go with the 257.5 and we sell the 260 for tomorrow, we're spending about 84 to make 165. Or we can go with the naked here, because if we sell the 65, you're not going to get anything for it. So you're just going to go with the naked 260. Otherwise, you go next week and you do the 260 and you sell the 65. Now you're spending 140 to make 350, 360, chance of profit 30%. I like this trade a little better. Can we do a butterfly? Sure, we can do a butterfly here with the 260, 265, and then 270. Cost you about 90 cents. But to be honest with you, if you're going to go next week, might as well just do the 260, 265 call debit spread. So looks to me that Apple is going to begin to rebound and we should be buying call options today. But that's the only one that I see in terms of calls. The rest, NVIDIA, I think we have more declines to come once it cuts below 185 again. And Tesla below 440. So if you look at the daily chart here for Tesla, oversold. Let's take a look. Hourly, not really. It's not really oversold. It can go down furthermore if it wants. So for now, I would say that Tesla is going to reach that 420, and then let's see what happens after that. If 420 is lost, then we head down to 400. And if you have the 420 puts, you want to roll the 400 at that point. Okay, before we take your comments and your questions, folks, let's do the movers of the day. Beginning with, how about we do the losers? SGML is one of the losers today, so we sold it already. I think that was a good decision. Lumentum was short. Some of you want to jump the gun here and short. I'm going to wait till we lose the Fibonacci, to be honest with you. But if you're short right now, I mean, it looks like it got rejected multiple times. So wish you the best of luck here. SNDK, is it time to short? It's a bearish engulfing candle. But again, with a name that has a lot of momentum behind it like this, you want to be as patient as you can before you initiate a short, because you don't want to short again. Next thing you know, it blasts higher. So, but it looks good. It looks like we have a bearish engulfing candle. And you see NVIDIA down, you see Oracle down. So we have a little bit of concern again about the AI trade. If that kind of narrative continues, then we could see SNDK erasing the entirety of the pop that we've seen this week. Jefferies is another name that we talked about shorting, and right now, you look at the weekly chart. Rejection, right? You see rejection, the sloping line of resistance right here, 3 times. That means we're going to head down and retest support. If that doesn't hold, then down we go to the 200 weeks moving average. So, and Jefferies has a lot of problems, so I think that it should be the short portfolio. Again, we see weakness in AI trade right here in Vertiv. Not enough for us to short, though. Autodesk is getting hammered. Not sure what the reason is, really. A lot of software getting hit, but Alcoa, we're going to sell Alcoa today, in my opinion. I think it's a good time to sell because it looks like a topping candle and there's no more gains to come. So I think today is a good day to sell Alcoa and the majority of your metals portfolio. As far as Micron, it looks like a bearish engulfing candle, but look, the divergence between this chart and the 50 is way too much. Question is, it's been that way for a while. So how do we nail that this is the one that we're going to go down and retest the 50? It's going to take a lot. It's going to take a lot here. So if you zoom out, and it's going to take the MACD indicator showing you a little bit of solid evidence that's giving up. You need to see these red bars consistently. You're going to see some false crossings right here. You can fix those false crossings, by the way, by adjusting the settings of the MACD, but I don't recommend that because if you do that, now you're playing with how the indicator is designed to be. But it looks closer to a short here. In Micron, Roblox continues to get killed. Wish I shorted, folks. I regret it because I called it, but I didn't do it. But that's the name of the game. Dell is going down 4%, so we're back. I mean, I shorted it at 115, by the way. I shorted in 24, so I just been watching this chart going up and down, doing nothing at all. The SLX, this is the Silex Systems. I don't know why we have that. Goodbye. We want the SLX, the Steel ETF. We already have that. GLW, we have a short on it. Now giving up the 50 days moving average. I think we head down to 80 and then we break down to the 200 days moving average in time. You see AVGO also showing you sort of a bear flag pattern. And to be honest with you, folks, so this is going to go down to the 200 days moving average in AVGO. But let me show you something here. MAGS, this is the MAG 7 ETF. And if you look at the chart, the pattern of the chart, we have a rising wedge. We're about to break down. So there is a correction coming really, really soon in these big cap names. And it's going to get ugly. It's going to take the indices down in a big way. So buckle up your seatbelt, so you better be ready here, folks. Intel, it looks like it's given up, but we'll give it all the way till tomorrow, see if they can do it to 45 or not before we sell. We talked about Oracle. A lot of names down over 2-3%. You can see here. OKLO now coming back down. Rejection from the 50. I wish Bloom Energy would act this way, but we'll look at Bloom in a minute here. AMD, the weakness keep going, so I think the AMD is probably going to breach 200, and then we have 195 as the last support before it flushes down to close the gap right here. ALB, I'm going to sell that today too. I think it's a topping candle. We're going to begin to head down, so I'm going to sell that today. Alaska Airlines, we added recently, but look, if he closed below 49, I'm cutting the position, and we'll try again later. It could be just bad entry for now, but it works out as we head closer to the travel season of World Cup and whatnot. I know I'm taking too long here, folks, in covering this, but I think this is pretty good. Amgen, so we're seeing a little bit of weakness here. EQT, a little bit of weakness, but nothing significant. A lot of names, though, down 2-3% today. What is moving to the upside? Defense contractors, now that Trump wants $1.5 trillion in defense spending. I mean, this country is going to hell, folks. But anyways, in the meantime, KTOS is going higher, heading to retest the highs right here. Lockheed Martin, same thing. It's recovering right now. but still has the upper Bollinger Bands problem. So it's going to be really, really hard to buy it here and expect more and more gains consistently. I would recommend, if you happen to be a shareholder of Lockheed Martin, to sell some covered calls. So if you do NMT, and we sell some covered calls here, let's do a call and sell. There we go. Let's see what we can get here. 530. Problem is the volume is not pretty good. 540, but you can see the credit, it's pretty nice. It's just a matter of finding volume. I would not go to February though. We'll go to 16th here and try to get the 435. Try to get some credit out of it. I mean, it has a little bit of volume, but it's still a wide spread. So put a limit order here. Try to get $7 out of it. See if that works out. Maybe 680 will be good for the 435, or you can go to the 540 and try to get $5 out of it at least. And that would be a good covered call for NMT. Bloom Energy. We talked about hedging yesterday. Once we closed above the 50, got a hedge. So we got the hedge today, but it looks like it's stopping right now, right outside of the upper Bollinger Bands, reverse hammer. So I think that the AI trade is weakening to begin with. So good indicators that the hedge did its job today. So you might want to book it and just watch it decline again. You can see defense contractors like Northrop is going higher. Iran is the exception in AI. It's moving up. So we'll see what happens here, but we're still profitable in the position, so we're not going to panic about it. Mosaic, we talked about the saucer bottom. Here we go. Now we're up 4.5% today. What else is moving up? CD or MGM, some of these classic names, but there's no unified theme. I can't follow anything here, folks. I can't follow MGM. I can't follow any of these pops because they just don't make sense. Going alone like this. Look at Merck. Merck is hitting higher again, so we're doing pretty good at Merck. Fastenal, not so hot, so Raytheon moving up. XPEV, do we add? No, we already added. Didn't work out, so we have to wait a little bit more, maybe. Got a little bit of an inverse and shoulder situation here. And speaking of, BABA looks pretty good, right? BABA's probably getting hit out of this falling wedge pattern, so could be. If we close above 157.25, then you probably want to buy it. But besides that, folks, I'm just going to leave it here because we have a lot of names that are also up to 3%, but it's mostly outside of technology, so I don't see a unified theme that I have to follow today besides what I've already done. So let's leave it here back at the SPY and take your comments and your questions. Apologies for the delay. Good morning and shalom. Mav, I'm waiting on VIX 17 so I can get out of this herd locker I put myself into. Think we do this week? We do it this week? The VIX? I'm not sure you can do it this week because we have 1 day left unless there's a really bad jobs number. By bad, I mean that it's going to be good. So it reduces the odds for a Fed rate cut. If that is the case, then sure, we can pop to 17. But I'm anticipating more toward the monthly expiration of the options in January, which is the 16th. So Monday, Tuesday, we're probably going to be at 17. I don't know what your expiration is for your VIX calls, but it's inevitable. We're going to head back to 17. Just a matter of when, not if. Indices beginning to flush again, led by the Qs. Let's take another one here. Long AMLP and CRAK looking to layer DBO. Can you speak to oil again? Looks promising. Okay, so AMLP. Look at the daily chart right here. Folks, I'm going to reiterate that if you want to invest in oil, to be honest with you, you have to invest in Exxon and Chevron. But here, for this guy, AMLP, what are we looking in this? Because it is a dividend-paying kind of investment. So I don't expect that anything that would happen here. It's just going to continue to consolidate. So if you're looking for growth, you need to look somewhere else. But if you're looking for a dividend, it's been doing the job, right? It's for a year. The stock been flat and giving you 10%. So for now, I'd keep it. As far as CRAK, this is the oil refiners ETF. Look, when it comes to oil, even if you go, let's say the XLE, the energy ETF, dominated by Exxon and Chevron, so this is why it's doing a little bit better. But be honest with you got to pick the winners. Who's going to win from the Venezuela situation? It's Valero. So if you want to buy the refiners, stick to Valero. If you're going to buy the oil companies, then stick to Chevron or stick to Exxon. Either one will do the job. Stick with the big ones because right now, and I keep saying that repeatedly, if the price of crude is under $65, you can't really make money. The smaller producers like Oxy and whatnot, they need a price above 65 to begin to make money. But Exxon, Chevron, and Shell, they're okay with the price under 60. Even at some point, 50s will be okay. They can flip a profit. But the smaller ones, you need a price above 65. So for now, I want you to stick with the big guys. Okay, this stock market, it's, schizophrenic, sure. And B is lunatic in the asylum. Love the analogy. I have been short since 90 and going crazy. I don't want to cut, but this is painful. Am I missing any news? No, it's just the little bit of optimism that we got earlier this year in the same trade. But hey, it's coming back down, right? So we just talked about this. You close above the 50, you need a hedge. If you get a hedge, I think that today is okay to close it and take that hedge because it looks like a reversal candle. I would not be surprised to see Bloom Energy going negative today based on what I see in the video and all of that. So I think you need to wait and see what's going to happen in the end of the session. And don't forget that Bloom Energy is entangled with the Oracle fiasco. So the more we see bad news from Oracle, the more likely we see Bloom Energy hitting down. So I don't want you to cut the short here. It's going to work out. But again, life of any short is there's a lot of pain before you get the reward. Hey, man, what do you think about KDP for a swing trade via shares? KDP. Dr. Pepper. It hasn't been doing anything, though, for a while, so I don't know if the pop that we're seeing today is based on a certain piece of news that we have. I am not seeing it. Could be options activities. I mean, if you look at the weekly chart right here, it looks like we have positive momentum, but it's not the most compelling chart, to be honest with you, because it's still in a bear flag pattern here in the weekly. And there's a lot that has to happen before we say it's a buy. Sure, you have higher lows, but that's about it. You need to break one way or the other, so I'm just not seeing it here. I'm looking at Gap, cheap clothing, store challenging all previous stops. So if we look at Gap, clean this up right here. The Gap Company. It's gapping up, so I would say be careful with shorting this stuff because we have high short float in these names, and who the hell knows? I mean, Gap might just drop an ad with Sydney Sweeney on it, and you see the shares up 10, 20%. So you really don't want to short it just because it's going higher for no good reason. I need to see breakdowns in technical patterns and mechanics and the psychology of the market before I begin to short in a name like this. So I don't think it's worth it. You might try to short it and then get trapped in it. So let's not do that. Okay, Jerome, my 401k retirement account has very limited numbers of investments, S&P bonds, money market. That's the classic retirement portfolio. Could you comment on possible strategies? So the only thing I would recommend here, because money market is okay, you're still getting a pretty good yield, and bonds, of course, that you need that depending on your age, you need that. But as far as the S&P, the problem is the weight of technology is way too high in the S&P, the highest we've seen ever. which make the S&P not reliable for a retirement account. Because if these names go down, and they will at some point, they're going to take the indices down by 30, 40, 50%, if not even more. So I would say that one way you can go around it is to go, for example, with an RSP ETF, equal weight. You can also move your stock portfolio toward international. I don't know who's handling your 401k, but if it's Vanguard, for example, they have plenty of international ETFs that are pretty good. So you need to really look into how do I begin to diversify away from the concentration of the SPY, the S&P 500. And that's going to take not just picking individual names. You can't do that in the 401k. It's not recommended to begin with. But you have to use either an equal weight, or you have to use gold or silver. And again, depending on what your retirement account with, you have a lot of options in ETFs to do that. So I would say just get out of the S&P because of that technology concentration that we have right now. Okay, Stone, you say that you have a bear call spread in Micron for Jan 16, 360, 335. Am I okay to hold, or should I book profits? So we sold the 35, bought the 360. 35, and we got the 360. Okay, so that's pretty good. That's pretty good for now. The only thing I could help you with here is it could be a topping candle, confirmation candle, but it's not reversing this candle right here. So it's not quite the confirmation yet. The only thing I can do here is look at the options data and see what's going on with Micron. If we do that, I see some calls, but they're closing a lot of these calls. And I see a lot of puts being bought. See all of this open interest right here? So the likelihood is that we see the market maker pushing Micron even further to the downside because of this open interest. And I bet that we're going to add more to it with the volume today. So my 2 cents would say hold it for another day. Hold it for another day. You're probably going to capture even a higher credit than you think. And look, if there's a flush tomorrow, for example, and we're closer to 300, then you don't need to do anything about it because you're probably going to get the full credit by the expiration date. SPY found a footing here. So is it NVIDIA? No, it's not NVIDIA. Is it Bitcoin? Yeah, it could be Bitcoin. It could be Bitcoin here that it moved a little bit higher. So, New York Fed, inflation expectations largely unchanged. Labor market outlook weakens. Well, we'll see. We have a jobs number tomorrow. So, they can talk all they want, but at the end of the day, the numbers are going to speak. Anyhow, let's go back here. Stone, you have another question, but you deleted it, right, for Bloom Energy. So I think we take the hedge out because I'm positive that's going to begin to head down because OKLO is not doing pretty good. It got rejected off the 50. So there's another question by Lenny here. Would you add to BE and OKLO shorts at this point? Yes, I will add to one of them. OKLO, for example. BE needs a little bit of work because it has momentum behind it. I want to make sure that it topped today and it's going to begin to head down from this point on. So OKLO would do an addition to the short, but BE, I'll wait a little bit more. How about EUAD? Buy now or wait for a pullback? Look, I could say that you could wait for a pullback, but anybody who's been waiting on a pullback didn't get a decent one, right? So maybe you're reaching a top right here and get a pullback, but the moment you get a pullback, you have to get into it. I think we'll see a pullback. But what if it doesn't happen? What if we continue to move higher based on pieces of news and whatnot, and we have further 5%, 6, 7% to the upside? The best way to go around it is to do increments. So you enter today 10% of the position, for example. And as it dips down, you begin to add more. So you add about 50% on the way down. Now you have 50% of the position as it pulls back. Now when you begin to rebound and you find solid footing, take the previous high out, you add the other 50. That's the way you usually deal with it. Dear Mav, did I hear correctly? BE should be back on the short list or wait a little longer? Well, I'm still short, so I'm still short. But the question is, do we add today? The answer is this look above the 50 days moving average and gapping up is still stronger than, let's say, OKLO, which is facing a little bit of rejection at the 50. So I'd rather, by the end of the session, if OKLO closes the lows of the session, I'd rather add to my OKLO short rather than BE. Wait a little bit more till we see another confirmation that we're closing below the 50 days moving average in BE before I add another increment of the short. It's back and forth here. I think that the put pressure is pretty high for the market maker just to ignore it and move the tape higher. So that gravity is going to continue to pull it down. Keymaster, he may have bought KR. This is Kroger 60 puts and Conagra 16 puts, both for February. Appreciate your thoughts. I was looking at Kroger this morning. It's not looking pretty good, but it looks like it bottomed, right? It looks like it got really oversold here. So if you have the 60 and the expiration date you say is February 20, I don't know about holding it because it looks to me that Kroger is getting a little bit oversold. And if the market begins to shift toward a defensive formation, you're probably going to see Kroger outperforming again. So I would say on that one, you want to probably book the trade. Now, as far as Conagra, you have the 16 puts, same thing. It's oversold, though, outside of the Bollinger Band. So I would book both of them because right now it looks like the market wants to rotate toward these defensives, as you can see. So the timing is not good in holding it all the way to February, at least with the way they're oversold right now. Okay, hey Mav, what is your thought or your take on Revvion? Looks like it's getting more options volume on bar charts. So one of my biggest mistakes last year is dumping Revvion because it worked out at the end of the day. So I tried, then dumped it right here, and then boom, next thing you know, it went up. So look, Revvion, it doesn't make sense that we're going to see more upside to come, but there's a little bit of excitement about the chip that they're developing here. So it could be an ABC breakout. So I would give it a shot in buying calls in Revvion, but keep your cut loss at 18. I have it here. The lows should be 1869. If we trade below that number, you probably want to cut it because it's not going to work out. So if we take this support right here, not going to work out. Otherwise, it looks like an ABC breakout about to happen. Close out the SPY spread you shared at the close yesterday or keep through the session tomorrow. So we talked about 88, 84, right? So the 88 puts 84 spread. So right now, I think that you should be keeping it because I'm looking at the put options volume, and I think that the puts have the advantage in today's session. So what if we go down to 85 by the end of the session? So I would say keep it. If we go down to 86, 85, we'll close it right away before tomorrow's session because if we go down to 85, 685 in the SPY, it's pretty much in the bag that we're going to have a rebound in tomorrow's session. Let's do good call on MOS. Let's hope it sticks, though. Mav, I'm thinking about selling my LMT, largest defense position, rotating toward EUAD and XAR. That would be okay if you want the exposure toward the European contractors, but I would say don't do it right now, right? You might book your profits right now in Lockheed Martin, but maybe you want to wait a week or two before you rotate to EUAD, and I think you'll have a better price at that point. It's hard to say for sure because it's been blasting higher, leg up after leg up after leg up, but it looks to me here that it reached the previous top and it might pull back a little bit more, and it would be in your benefit to sell Lockheed today, wait and hold the cash, and then buy EUAD at a lower price. Okay, thoughts on WDC similar to SanDisk. So they're all working the same way, right? Because the thesis is that we have shortages in DRAM, but this one is reversing a little bit more. So I would say that the memory chip trade is also topping, blow off top, as we said earlier in the week, and they're going to begin to head down. But it's a dangerous situation because these names have a lot of momentum behind them. So you have to be really careful and not go big with the short right away. It has to be via increments. And when you begin to see, for example, rebounds that take you above a certain moving average, then you have to hedge and buy some naked calls. But right now, I think that we're getting really close, as it looks right here, of a top in these memory chip names. I think that maybe Micron printed the top of the year, WDC, maybe SanDisk did the same. So it remains to be seen, but I think I'm confident about 60 to 70% the tops are in these names. RTX, same deal as LMT, yes. I mean, Trump attacked Raytheon yesterday, so if you want to use the pop as an opportunity to sell, I would not blame you. And it seems that a lot of investors are doing the same thing, right? We've seen a pop in the morning and now they're selling it because, sure, we got the news that we're going to increase the defense budget by $1.5 trillion, but that's of course dependent on Congress and whether a budget is going to be approved or not. It's insane to move the budget up by 50%, given the debt that we have. So it could be all talk right now. But what's not going to be talk is his attack against Raytheon. That could continue in the next few days, and it could move the shares down. So I would say if you've been a Raytheon shareholder, look, we've done pretty good. Why not sell some covered calls and buy some puts? Let's do a hedging strategy here on Raytheon. Just going to go all the way to February and sell the calls at 200. Let's see if we can get some credit out of it, and then use the credit to buy a put. And if we break 180, I think we have a technical breakdown with more declines to come, maybe closing the gap right here around 160. So I want to get out of 180. So a hedging strategy like this for February, you sell the 200, you buy the 180, costs you about $88. Now, you can play with the expiration dates all you want and pick the one that fits you, but it looks like this. You sell the 200, you buy 180. You can play with the strikes all you want, see what strike are you comfortable with, because some folks will sell the 190 and just receive a higher credit. Your obligation, of course, if Raytheon trades above 190 by February 20, is you have to sell it at 190. Otherwise, if it heads down, the beauty of this strategy is you get to sell your shares at 180 even if they're trading at 150 at the time. And on top of that, you got paid for this protection strategy right here. So this is what I would recommend in RTX, because he's not going to stop attacking Raytheon. There is another tweet coming. Okay, can you give us the IWM downside projection for today and tomorrow? So if we look at the IWM, suppose the yields go up in tomorrow's session, I think the IWM would head down. But right now there's no reversal pattern yet. There is just resistance going on. So I think you're better off shorting the Qs. But the Qs is the one that's showing weakness. Why not stick with the Qs or even the SPY? The IWM right now is showing a lot of strength. So short the weak, not the strong. Maybe you want to buy the IWM and actually have a short in the Qs. And you have a balanced approach at that point. BE hedge worked perfectly, was out early today. Good for you. This is how we deal with it, right? And now BE is probably ready to go down. So the hedge did its job. Thank you so much. From the silver top, I started short the inverse ETF, ZSL. Should I add more? ZSL. This is if you want to short silver. So yeah, look, I think you should be adding more. My 2 cents is silver is heading down. So you see these gap downs and they buy it mid-session, but then we gap down again. And look, at the end of the day, I think that the SLV is going to head down and reach the 50. I don't think it's going to happen in one shot like this, but in time, it's going to decline and the 50 continues to climb, but then we meet maybe at around 60. With that being said, it means that the ZSL, the inverse for silver, is going to have further upside to come. So I would say definitely add. What's your take on bar chart? I use it. That's what we're using every day, so it works. And we talked to them. I think we settled some of the differences that we had, and we might get that discount code pretty soon for members. Even if you have a membership already in bar chart, you can add it to your membership and have that discount. So we'll work something out with them here. But yeah, I like bar chart. It gives me all the data that I need. I don't need the Bloomberg terminal anymore. Let's talk here about SNDK. Lenny, you sold the 400 in SNDK calls yesterday. Good for you. That's ballsy. SNDK, you sold the 400. I think you're safe. That's pretty good, man. That's impressive. And now we have a bearish engulfing candle. So we might reverse the entirety of the move, folks. I hope so, because it's not merited at all. There's no reason, besides rumors, that we're going to have this shortage in DRAM and shortages in memory chips will continue. But at the same time, like I said, my projection is that we're going to see companies announcing canceling or delaying some of the data center projects. And that's going to begin to readjust the estimates of how severe the shortage in memory chips really are. SPY, I think it's going to be an interesting session. I think by the end of the day, it's going to be a really interesting session because if we do flush down, I think there's a possibility we can go down to 85. Possible. Not betting on it, but I think it's possible. Let's see who we have in Discord. As I know, Bloomberg Commodity Index from 8 Jan to 14, 7 billion. You want to buy the Bloomberg Commodity Index? I think that's flawed. I tried to buy it before. It didn't work out. So I think you should buy the commodity that you like. Do not buy commodity ETF. Okay, SNDK traded 10 million shares in 1 hour and 30 minutes. Yeah, so, I mean, it is a classic sign that the name is probably reversing and topping at this point. So, crossing our fingers, we'll see what happens. Patreon gang. You're all asleep. There's nobody here. Besides Firecat. Good morning. Did you get stopped out of Alaska? Thanks. No, I have a manual stop. I don't have a stop loss order. I have a manual stop, meaning that if we, by the end of the session, if it looks that we're trading below 49, yeah, I'm cutting. It just shows me that it is a bad entry. It doesn't mean that we're wrong. It could happen that Alaska trades higher after the earnings report, for example. But right now, it just negates the technical pattern that I used to enter the trade. So if we lose 49, no longer bull flag. Okay, now I have no thesis to hold the name, so I have to take the loss. Anyhow, folks, we'll look here. Last look at the SPY one more time. Let's do the SPY at the 8. And call options. I mean, the volume for the calls is really, really concentrated right here. I see higher volume showing up all in all for the puts. See, the market maker can exercise maximum pain in the puts if it trades above 690 and then bite the bullet and pay these guys right here, 91 all the way to 94. That would be considered as maximum pain. But if you go down to if you go to 690, up to 690, I should say, you could be sucked into this call feedback. So it's safer for the market maker to just continue to sell. And I think that's what they're probably going to do by the end of this session. That's my 2 cents for now. Of course, Bitcoin dictates a lot of the stuff that happens algorithmically. So keep an eye on Bitcoin. Back to the hourly chart right here. We talked about falling wedge. Going to retest some resistance around 91. And then if we go down and we cut below 90, oh, we got a problem here. That's probably going to take the SPY down to 685. Can you give your analysis on Qualcomm? So look, Qualcomm, I'm just giving you what the managers are saying and they like it. So from a technical standpoint, I confirm. We have an inverse head and shoulder, we have a falling wedge pattern, we have a breakout, and now we have a little bit of consolidation. Plug in your moving averages, you're above all of them. So so far so good. Looks pretty good to me, and the valuation is pretty reasonable when you compare it to other AI chips. So I would say that if you like what the managers are thinking and you think that Qualcomm offers value for now, while you still have your bet on AI, then you should buy some shares of Qualcomm and maybe set a stop loss at 177 and 175. No harm done. NVIDIA, watch this guy right here. If we lose 185, we got to flush all the way down to 180, then 175. So we have two gaps here to fill. We have this 180, let's call it 180. And then we have that 175 right here. So watch 185. If we lose it, going to go ahead and close these gaps right here. With that, folks, I'm going to wrap it up right here because we're running out of time, but we're going to be back in about an hour in the chat session in Discord. So any questions you got, any development in the market, we're going to cover it in about an hour in Discord. So stick around here, folks. Mehmet, you say that I missed the question about the Bloomberg Commodity Index. I would say I don't recommend it. It's flawed. Any commodity ETF is flawed by nature. If you want to trade coffee, you trade coffee. You want to trade gold, you trade gold. But you can't trade an index because every commodity moves a certain way. So using a commodity index ETF just doesn't make sense at all, to me at least. But with that, folks, we're going to wrap it up right here. We'll be back about an hour, so see you then. In the meantime, good luck with the rest of the day. We talked about Western Digital, Lenny. We talked about WDC. Same thing. It's stopping, right? So if I show you the look right here. Right, it is topping. That's a topping candle for the week. So if you're confident that it is, take your Fibonacci right here. And you don't need it to be spot on. You just need an approximate estimate here. And that means that we do a 50% retracement. That takes us down to 125 in time. So you have all of these targets that you can play with if you want to short. I think it makes sense to short the name right now. But anyhow, hey, Mav, CVX, are we clear to add another increment? Yes. Yes, because you have crude oil moving up and you have a green candle so far. So the buyers are beginning to show up. So I think, yes, you can add to CVX. Anyhow, let's try again and wrap it up here, folks. Going to meet in about an hour. See you then. And good luck with the rest of the day. Thank you for joining me in this session. Take care.